Hey, good evening traders, it's Mark here. It's the 4th of July, bank holiday in the US. I hope everyone's enjoying themselves over in the US right now, Independence Day. So what's happening in the markets and what can we see? I'm going to take a look at predominantly a few major markets. We're going to start with the dollar index, move on to the euro. We'll look at a couple of risk currencies. So we'll look at Canadian dollar and we'll also look at Australian dollar. And then I'm going to move over and take a look at maybe Bitcoin and another Canadian cross pair, maybe EURCAD as it's approaching a nice level. So that's going to be the rundown for today. Dollar index. So obviously this afternoon liquidity is going to be pretty much non-existent coming from the US session. We've got about an hour and a half until in theory the US closes, but we know that really the US really isn't open right now for trading. What are we seeing on the market? Well, if we look at the dollar index, we can see we've got a bit of a double top formation with the neckline coming in just below the 104. Now, one way to look at this also is in terms of oscillators. Can we see anything that is highlighting that maybe this move to the upside is starting to fade? Well, if we look at the MACD histogram, we can see here we've got basically from the previous high over here, and we look at the current that high directly below on the MACD histogram, and then we look at the current high and the MACD histogram. We can see that we've got a descending trend line from those two peaks, whereas if we look at price action, we've got an ascending trend line connecting those peaks. So what does this mean? Essentially, it means that price is starting to fade, buying momentum is weakening to some extent, and that a reversal could be on the cards. It doesn't mean that it's guaranteed. Obviously, nothing is guaranteed. So how could we look at potentially trading this? Well, if this is going to be a double top and this is going to be the neckline, essentially we want to see a change in cycle, and then we can look to trade that back down into the 101. So a break of sort of this 104 area, and then looking for a lower high. Now, if you did want to be a little bit more aggressive rather than just waiting for price to break the double top neckline, we could be looking at sort of these swing lows in and around 104.67. So using this sort of area here for price to break down and rotate, give us a lower high and trade it into the neckline. That would be your area to basically take some profits, see if the market is going to break down lower, and if it does, then we can look to add in and scale into that trade and run it lower. Now, on the flip side, if we are going to see, oh, that wasn't very well drawn, if we are going to see some dollar strength and we are going to see it resume, then we're probably going to see this resistance level broken, and then what we'd look for is that potential higher low to be formed to trade it long. If you are breakout traders, then you could look to trade a close above this area. As you can see, we haven't had a close above. The highest close we've had is this here, this candle in here. So close above that, and then using sort of an impulsive move as price breaks the candle that does that on, say, the 4-hour chart. So if we then move it over and look at the euro dollar, what does that look like and how could we potentially trade it? So let's go to the daily chart. I've removed all my lines on this so you can basically watch me break it down and draw on any sort of analysis that I see fit and how I will potentially trade it. Well, we've got a base set in here around 103.80 to 104. So this is going to be the inverted option of looking at the dollar index, where yes, price could potentially move lower, but we want to see it close below this area here, and then we could look for any sort of correction back into the zone to then trade for the next impulse. Or if you are breakout traders, once you've had that candle close below that zone, look for the market to just pull back a little bit, and then we can trade it with an impulsive move as it continues to move lower. This obviously you're going to be securing profits a lot quicker with it being a breakout. But like the dollar index, we can see that the market here is putting in a flat line, but yet the MACD histogram is putting in an ascending line, which is a divergence signal, meaning that the market momentum to the downside is fading and that we could potentially see a market movement to the upside. So clues and things to watch out for would be if we just start drawing on our trend lines, our horizontals, etc., and we can start looking at where we can start pinpointing price to move to and from. So if I was to be looking at this chart right now, areas of interest for me would be around this area here. So what I essentially want to see is, yes, if you are an aggressive trader, you could look at buying the market somewhere down here. If you see a double bottom on the 5-minute, you see a change in cycle, something very aggressive, but you'd be looking to take some profit or risk off the table as soon as you've got a 1-to-1 or at least coming into some sort of structural point. The most conservative and methodical way I would see trading this would be waiting for price to break above 106, because then what we see is we see price has broken this descending trend line, and we also see it breaking and closing above the 106 even handle. So we want to see price get up here somewhere, and then we can watch for a correction back into this zone to trade it long with profit targets in and around the 108 area, somewhere through here, taking money off the table in case we get a correction back down into the bottom of the range around 106. But again, if it does break out, you've left some on the table where you can continue that trade and look to add into it should the market move in our favor. So that's looking at the euro. We're going to move over to Canadian dollar now, and then we're going to look at the Australian dollar before moving on to EURCAD and then Bitcoin. So Canadian dollar, what are we looking at? What's happened today, and how could we take advantage of this move? Well, price created a double top, a rejection of the 1.3050 level. We've then seen the market move in a steady manner down towards around 128.70. Today would be the first close below that sort of key area that we can see on the chart. But more importantly, if we go down to a smaller time frame, what you'll see is how the market was trending and then broke a counter trend line. So if I just draw in here, we look at this left shoulder, head, right shoulder, then we have the neckline coming through here. So proper classic charting pattern here of a head and shoulders, where the market then broke through, created a new low. And since then we've been in a corrective or bearish corrective pattern that broke the counter trend line and created a new low. So we had a sell limit sat up here where we're looking to take advantage of this move where it can continue to the downside. Now obviously you're not our members, so you won't have seen that, and if you haven't taken it, don't worry, the trade is still viable. You could look at shorting this 4-hour candle that's rejecting and retesting the trend line, so pretty much a live entry with stops somewhere around above the 129 even handle. So on this basis, what I would say is look at it on the hourly chart, and you can see how the market did react and retest this area perfectly. So you'll see the counter trend line. We've had the market, let me just move it down a little bit, sorry, the chart is sticking. There we go. So we've had rejection, again rejection, breakthrough, retest, and the market started to move in our desired direction. Now, as I showed you on the previous charts, the H4 candle is just about breaking the low. So options you've got is you could trade it pretty much live, as I was saying, because it's breaking the low, or you could wait until tomorrow and wait for a new swing low to be broken and then trade the correction after that. Obviously it comes down to personal preference and how you would like to trade according to your trading plan. So that's dollar CAD looking very nice for further downside. We do have several targets in place, moving as low as I think 126.02 if I remember rightly, 126.12. So that's where we're looking for the market to run down to. If we go over to the Australian dollar, we'll go up to a slightly higher time frame. We'll look at how the market is correlated. We'll go to the weekly chart, and then we'll break it down to the 4-hour chart. So I'm just going to zoom right down so you can take a look at the bigger picture. So we'll see right down here we have the pandemic lows that I'm just highlighting, and then this is the highs after the pandemic. So we basically had the initial dollar impulsive move where the dollar really got strong, and then as the Fed basically printed and reduced rates and basically propped up the market like you can't believe, we saw the US dollar sell off significantly and the Aussie dollar reached a high of 0.8, and then since then the Aussie dollar has been in a pretty much a corrective move, and as you'll see the market has pretty much created a bullish flag pattern that's kind of it's not perfect, but you can see how the market is reacting. We've had 1, 2, 3, and now this is our fourth rejection of the support trend line. Now at this point here in confluence, if we measure our fibs from swing low to swing high, it's a 50% correction. So now what we're looking for is a potential opportunity to get long this market, because we've seen the market reject this area several times. So now what we'd look for is for price to potentially push on into the 0.74 and then around 0.72 for at least your first take profits. But before we do that, we need to see a little bit more confirmation from the market. So the confirmation we're going to look for is a break and close above 2 points of structure. Now, as you'll see right now, we've got an area here, the blue zone marked out around 68.70. But we can also see that we've got a descending trend line where the market has rejected it several times here, again here, and then also today. So what we need to see is we need to see the market get above this area, probably come up into around this swing high here, then have a retracement back into around the 68.60, 68.80 area before we can conclude that movement and start next impulsive move up into around 0.7050 initial targets, 7200 as another extended target, and then moving on towards 75 towards the top of that bullish flag pattern. Now obviously the bullish flag pattern, if we are going to trade that, in theory it should break out at some point, but you know, it could stay in that flag pattern for a number of weeks or months. So we're just going to trade what we see, and we're going to scale out at the appropriate time so that we don't get caught in the market and lose any unwanted profits. So that's Aussie, that's CAD, they've all been covered. Happy with those. Let's take a look at I'll move on to Bitcoin and then I'll do EURCAD last. So Bitcoin, you know, I'm still not exactly bullish this market yet. It's come into some key areas. Let's go to the weekly chart. So as we can see, price is hovering around that 2017 highs, and I'll just zoom out so you can see. So here we are. This was the 2017 highs. The market's come back into that area. Last week was a clinical close below that area. So it's, as we're seeing the early part of this week pushing higher, I think we're going to break this week's low. We'll potentially test the low coming back to the low of June, which is going to be what, just under 18, that's 17,500. Now if we break that low, don't be surprised if we head back down to around 12,000. We're not seeing the influx of buyers that we would normally see. So I think 17,500 is going to be pivotal now. We need to see buyers come back into the market for Bitcoin and Ethereum. Until we see that, I'm not trading altcoins. I want to see the market rotate. Once we start seeing some buyers, and you know, it could be a very fast buy, or we could just see a year of consolidation in these markets. You know, it could be something like this. You know, you look at this period here, it was just consolidation before we got liftoff, and that was what, best part of 2 years, just over 2 years. So don't be surprised if we get a year of consolidation, because we've been, what, let's have a look, since the highs were back in November 21. So it's coming up, what, best part of 7 months where the market's been in bear territory. You could see that if we look at this here, let's just have a look. Let's go fast forward. So that was December. So talking, the lows came in a year later. So maybe we've got until November 22 for the low to come in, and then we start to see a steady incline, period of sideways movement before we then get lift off again. So listen, don't think that just because you're bullish crypto, etc., that we're going to get an automatic lift off straight away. It may not happen. You've got to bide your time. If you believe in the industry, if you believe in blockchain, you believe in the coins and the markets that you want to be a buyer of, you know, just give it time. And every time you see price come into a key structural point, then you can use that to average down or to buy into the market at a better price. But don't try and force things, and don't over leverage, because that's when the shit hits the fan. So I'm just going to sit tight right now, but it is getting into an interesting area. I want to see buyers come into the market for me to get excited and start buying again. So I might need to see a jump above 22,000, and we could see a push up into 28 before it either drops down or we continue that move up. But I am looking for opportunities. I just need to see Bitcoin buyers step into the marketplace. Right, one last chart, and then I'm going to call it a day because I don't want to go on too long. We've been going around 15.5 minutes now. It's just one last chart because I think it's setting up for a potential buy. We're at a key structural level. We're at a big number. We're seeing euro down at a significant level. The only downside to this market is I feel that both euro and Canadian dollar are going to appreciate against the US dollar. So you're effectively looking at trading two markets that are potentially going to strengthen against the US dollar, and EURCAD is a triangulation. Always remember that. Any cross pair is a triangulation. It's the euro against the US dollar, and it's the Canadian dollar against the US dollar, where you then create the triangulation for EURCAD. So you could be fighting a bit of a tug of war between two stronger currencies, but we are in a very key area where in theory buyers should start to step in and start to look for opportunities. So as you can see, I've got my zone of interest where I want to be a buyer in and around here, around 134s. If we drop down to the hourly chart, what do we see? Well, we've seen price push down into the even handle. We've seen price push down into structure support. If you wanted to be aggressive, you could literally just be putting buy stop above the previous hourly candle high, and you could put your stop loss way under structure, so somewhere around here, around 133.70 to 133.80, depending how aggressive you want to be. That means you'd be getting out with 1-to-1, taking risk off before you even reach these swing highs here. So I like EURCAD as a trading opportunity this evening. Guys, that's it from me, Mark. Hope you've enjoyed the content. If you did enjoy it, give it a thumbs up. Please share it with fellow traders, and we will be posting more videos for you this week. Have a good evening, and if you are from the US, enjoy the rest of your 4th of July celebrations, and we'll see you all tomorrow. Good night.